Hi, and welcome back to Stock Talk. My name is Joe Rabil. I'm with Rabil Stock Research. So today I want to build on what we talked about last week and trying to avoid bad weakness and actually looking to buy good weakness. But I want to marry the fundamentals and the technicals, and at least the way I have seen it played out over the last 30 years working with professional investors. Most of the time when they call me, they already have a stock they're interested in. They like the fundamentals. And what I try and do, and what I've tried to do over the years, is improve their timing. So that's what I want to show you today in a stock that you might have an interest in from a fundamental standpoint. And I want to show you the ways that I think you can improve from a technical standpoint. So let's get into this agenda. So it's fundamentals and technicals. It's combining the two. I'm not going to go into the fundamentals. I'm not an expert on the fundamentals. All my clients are experts on fundamentals, so I never really, they always actually wanted me to have an independent, unbiased view and not have my fundamental opinion intertwined in what I'm seeing from the technical side. So I always stayed away from the fundamental side. But I have seen and talked to enough guys over the past 30 years to get a pretty good idea of where they're starting to see something or what's causing them to have an interest in it. So I just want to go through a few things. Number one, and I think the most important, is you're going to have to learn to have some patience if you want to use this approach. And then secondly, I'm going to show you a way to use two time frames together that I think can give you a really nice timing tool for a stock. And then the whole goal of this is to go back to last week and talk about looking to buy good weakness. I'm just going to give you a little bit more detail into how to go about doing that this week. And then we're going to go through the stock picks that came through. So let's go ahead and get into this. And so, I mean, one of the things that I have noticed is that when a stock is dropping and declining, that is where it starts to show up as a fundamental value. And what I've tried to do over the years is get guys to understand that this decline phase usually leads to some sort of a cup around pattern, some kind of a saucer. It's very rare that we have a move down and then it turns into a V bottom and goes straight up. Most of the time you get a drop and you get some form of consolidation, rehab, basing formation to take place. Now, sometimes it'll take 6 to 12 months, like this type of a pattern. And other times when you're in a strong uptrend, it might only take 2, 3, 4 months. But in most cases, what I'm trying to do is push people to the right of this bell-shaped curve. I want to get them in on the right side of that curve rather than on the left side. In both cases, I'd rather not buy on this side. I'd rather buy closer to this side. Now, there are a number of different techniques, but I'm going to show you one that I think is a pretty powerful tool. So if we go and we look at this, and let's just assume that this black line is the 18-month line and the red line is the 18-week. What I actually am looking for is this pullback, which is good weakness, right? We have a rising 18-month and we're getting a pullback or a correction on the weekly trend. And if you notice, what I've done is I've labeled these 1, 2, 3, and 4, and then back to 1 and 2. And I've done the same thing on the longer term time frame. And that's the 1 is a basing formation, the 2 is an uptrend, the 3 is a topping pattern, 4 is a declining phase. 1 would be the basing stage starting all over again, and then 2 is starting a new uptrend. So once we have that on the longer term time frame, we can go and look for the same thing taking place on a weekly chart. So we've gone through a decline phase, and now all of a sudden this is starting to turn around and base. For the aggressive fundamental guy that really loves a company, you could consider starting to take a position at 1 when on the weekly chart, when the monthly chart is in an uptrend, and you can use divergence for that. But most of the time I'm recommending looking for the 2 to match the 2 on the longer term time frame, and that's really where things are starting to kick in gear, typically where you're going to see the best relative performance as well. Let me go ahead and give you a couple examples now. Okay, I'm going to use Netflix, and I'm using the top from 2011, this decline that took place. And I wanted to go back in history because I don't want you guys to remember if you're watching this, I want to make sure you see this and have maybe an unbiased opinion. You get a big drop in a stock that's made a big run to the upside, and it starts to show up as a fundamental value because of how far it's dropped in such a short period of time. And so what I have seen over the years is a lot of guys saying, hey, I'd love to buy this thing here. And the point I guess I'm trying to make is that you don't know whether this is a bottom or not. We're still in that stage 4 declining period. We don't have a stage 1 base. We're on the left side of the bell-shaped curve. And in this situation, the stock actually continued to drop until it got down to about 10. Now, if we notice what's taken place here, we have gone full cycle and we've come back to a pretty significant support level, kind of like the original breakout area. So once we get that, and the likelihood is that we've completed the bottom of the, or at least finished the declining phase, we do have to go through that stage 1. Now, what I'll say to you is that if you want to trade this type of pattern for a move back up, you can do that. There are going to be tradable rallies you can look at, and what I described last week and stuff like PayPal and Facebook, I think there will be pretty good tradable rallies in these type of devastating declines because they've gotten so oversold. But what happens here is we actually end up getting the rally, and it can be pretty substantial. But then if you're a long-term investor, you end up seeing this come back down and test this low and even go to a new low, and this is not out of the norm. This is kind of what we see. Now, if you notice what's taken place here, now we've gone up and we've come back and tested, and we undercut the low at 10, and now we've gotten back above. So this is actually starting to look a little bit more interesting because we're getting back above the 18-week line. Now, as it continues to mature, then we actually see the full-fledged reversal of this pattern, and it starts to work higher. But if you notice, if we're looking at this from a bell-shaped curve standpoint and looking at what took place, instead of buying on the left side, I'm trying to encourage guys to buy on the right side of this curve. And sometimes you might be able to time it perfectly here and make a pretty good move. I mean, that's like 70, 80% in a very short period of time. But most guys that I see that are trying to do this aren't looking to trade it. They think they're getting in for the longer term. And if you're getting in for the longer term, I do believe this strategy is a little bit better, waiting for a really solid turn based on the moving average environment, based on the MACD, based on seeing green DI improve. Notice how that's the first time that's taken place. So when we get that, I think that's pretty encouraging. Let's go. Now, I do want to mention, look at what Netflix is doing right now. So I think we're in the same kind of stage right now. But let's just look at something like SCCO, which is currently taking place. And once again, we have this drop, and it goes through this period where you had a declining phase, didn't last very long, and then actually went to another new low. You could consider that all a part of the declining phase, or you could say this was the declining phase, and now this is all the 1. And now here is where the 2 comes in. You see how this cupped around, and now we're holding this 18, and the 18 is rising. Very similar to the picture that I showed early in this lesson. And then what we can remember is that we're sitting, this is all taking place, this whole cupping pattern is taking place right at the 18-month line, rising 18-month. This is a stage 2 uptrend, and we're getting a correction, and now we're getting a match right in here in the low to mid 60s. So that's the type of thing I think I want you to be on the lookout for, and have some patience. If you like a stock based on the fundamentals, make sure you can marry these two together. So let's go ahead and move on into the individual stocks now. Before we get into the stocks, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week. I also have a special video for the individual package service to highlight the ideas and some of the things that I'm seeing. So if you're interested in giving this a try, you can use the coupon code StockTalk, and you can get the first 2 months for $50. Let's get into the stocks. Okay, so as we start the request, actually the first one that came in was on the S&P, and the chart came in with a downtrend line broken, and then this horizontal line going across. And so I think I just want to address this because I think it's important, and I like to use the S&P as a proxy for how to look at the market. I mean, how to look at individual stocks. And so it's definitely worthwhile looking at this periodically. And so I think the question that was being asked is that, was this a 1, 2, 3? And the reality is, when you break a trend line, you still need to test after that. I know this had a test prior to breaking the trend line, but in my opinion, you need to, once you break the trend line, then you need to test. Now, one of the things that's happened here with the S&P is that we came down, and look at how we bounced right off the 18-month line. In fact, we tested it twice, and we're getting a really good rally off that level. The other thing that you can't see on the charts is that the sentiment got pretty negative at these lows. And so we've got those two things working in our favor, and that might prevent this from making a full-fledged test down to these lows. It might even prevent it from testing this trend line. It might be more of like a stealth 2. So if we got a 1 is the break of the trend line, 2 is the minor pullback, it could end up being more of like a sideways consolidation pattern. But we have to recognize that we're coming into a declining 18-week. It makes sense to me, based on what the ADX is doing, that this is not going to go flying right through this area. It should consolidate a little bit. It should back off. Some form of consolidation should take place in the near term. With that said, I would recommend looking for your stocks that look attractive right now. If they have a good-looking pattern, then I wouldn't necessarily wait for the S&P to set up. I would go ahead and buy the stocks that you like if they meet the criteria you're looking for. Especially if they've been showing signs of relative performance. Okay, let's go ahead and get into the individual stocks now. So here's an energy stock. This is actually on the Toronto Exchange, has been making a nice run. Look at this zigzag on the weekly, higher highs and higher lows all the way through. Great relative performer, but notice how on a monthly chart we're getting extended above the 18-month line, and now we're coming into this prior resistance zone. I personally think if you haven't taken profits, let's say you bought this down in here and you haven't taken profits yet, I would definitely recommend doing that. We're starting to see signs on the daily chart as this moves higher that we're not really getting the same kind of momentum characteristics that we had earlier in the trend. So I'm expecting this to go through a little bit more of a complex correction this time. Longer term, I think it's fine. I think in the short term, the short to intermediate term, we have some pullback risk. So ACM, actually somewhat of a similar theme, because if we look at the monthly chart, we're in a really strong trend, but look at how far we've gone from the original breakout. You see how $40 was the original breakout area from this big base here? And we made another move to the ups. Well, we came back and then made another move and broke out above this level, and then we consolidated and made another move through the 70 level, and now we're trying to get through 80. So we've worked our way higher and higher, and every time you take out another base from a higher level, there's more risk associated with it. So we need to recognize that, number one. Also, the ADX is getting pretty extended. But the other thing that's bugging me a little bit is that, again, look at how this is making higher highs and higher lows on a price basis, but look at how we've got failure to confirm on an ADX basis. This didn't even make it above 25 on this peak here. So again, I would be shying away from this as a buying opportunity. I would actually be looking to take profits in this and look for a more complex correction or sideways consolidation to maybe provide another buying opportunity down the road. Iron Mountain, same kind of theme, but not as bad. What bothers me about this is, and it's probably the easiest to see on a monthly chart. So you see the size, so that's a pretty good size bar, but look at this bar and the size of these bars. Now look at how big these bars are getting. Typically, you don't make big moves from a period of high volatility like this. Now, the momentum is strong, but the volatility is a little too high for my liking. So I'd like to see this quiet down. Yeah, it's possible it'll try and break out here and just go, but I think that it's going to be a tough one to play from my standpoint. I would have a tough time playing this, especially after this harsh sell. I don't think I really want to buy into that. And then if you break out, you're a little bit overbought. So I'd be waiting for a better opportunity. Hopefully it works its way back down into the 47 area again, and that would probably be a little bit more to my liking. Let's look at Raytheon. I mean, Raytheon has held up pretty well. Now, what I wanted to say on the aerospace area is that there was some climatic activity that took place here on this peak. This one really wasn't as bad, but again, we can look at this and recognize that the ADX really hasn't been confirming these highs. You see how we've been making higher highs here, and the ADX is making peaks below 25. So again, I have no problem if you want to trade this, but when I look at it from a momentum standpoint, it scares me a little bit when I look at the fact that momentum isn't confirming. Relative strength is good. We've got a lot of support in the 90 area, so if we can work our way back closer to that, I think I'd be a little bit more interested. So the travelers, the reality is that life insurance in the financial area, the insurance companies have really been trading the best. This hasn't pulled back at all. If you look at the way this played out, and we got a pretty severe pullback in financials, and this didn't even re-enter the breakout area. Now it continues to climb. We don't have ADX confirmation. We don't even have green DI making a new high above 25 here. So it's not one of those things where I would want to chase this. If we had a lot more strength on the ADX, then I might be willing to play any kind of little minor pullback in this situation. But because the ADX isn't that strong, I would hold what I have, but I probably wouldn't have that much interest in looking to chase this at this point. Maybe look for a little bit better correction period. Lowe's Corp. So we're correcting right now. So we can look at the monthly chart and see how we got extended away from this 18-month line, and we're working our way back down to that line. So this trend is up, but was extended. We've got good momentum characteristics here. But if we look at the weekly chart, again, focusing on this 18-week for the most part, notice how we just failed at the 18-week line. That leads me to believe that we're in a correction and that this wants to work its way back down, probably test this area, maybe even test 200. But more importantly, I think that MACD wants to work its way down closer to the zero line, and this ADX should come down a little bit lower. And that should take place over the course of the next month or two, and then set up another potential opportunity at the 200 area, or maybe slightly above. But remember what we're looking for, and we think about the lesson. We have this coming down. We want to see that cupping around and maybe see that happen, taking place right above the 18-month line. So I wouldn't call us, we're probably in a stage 4, but not going to have a lot more downside. And then I bet we start the 1 and then work our way around like that. So that's how you want to think about this. We're failing at an 18. Until we can get back through that 18, I don't have that much interest in this. So Tidewater, this is pretty impressive. If we go back and look at this monthly, we've got a big decline phase that found support at the 18-month for the first time. I mean, look at how long it's been that red DI has been above 25, and then it came down below, and now we're getting green to show up for the first time in a long, long time. This is the first time we've really held this 18-month line. I mean, let's just go back and look at this. See how we rallied here and then failed at the 18-month. We didn't hold it. And I can keep going back over time. Did it again up here, where we tried to get above and couldn't hold it. So, when I think about it in those terms, I would just say, there's no, this is the first time we're really making a pretty decent move when it comes to the 18-month, holding the 18-month line. Sorry, I lost my spot there. So, but look at the price action here on the weekly as well. And we're definitely seeing oil in equipment and services act a lot better. Good momentum. The negative is that this is overbought. I mean, we need to go through some kind of a pullback or a correction if we're going to play something along these lines. I just wanted to point out the difference that's taking place in the longer term trend. And I do think it's worth watching for a correction in these as another chance, maybe a buying opportunity on the next correction. EQX. So this is doing, let's just look at this weekly chart. We're breaking this downtrend line. We want it, so that's the 1. And I'd like to see this come back and test the moving averages and cup around. We're getting the MACD to cross the zero line, but it's not. It's more of a test of the zero line right now. It's not a full-fledged break. And we've got green DI on top. We got improving volume, but we need a little bit more confirmation here. I just think overall this is continuing to improve, but it's probably a little on the early side right now. So watch this, continue to see if this holds above 7.5 on any kind of correction or consolidation. I would definitely have an interest in it. CTSH, if we look at this relative to technology, right? I mean, this stock is holding up incredibly well. When we look at it on a relative to the S&P, it's actually been holding up really well. But if you think about it relative to technology, you got to have a lot of respect for what this has done. So I've been telling my subscribers, I think we really want to be putting together a list of stocks in the technology area to take advantage of if we can see a real bottom, and it looks like we've got some of the worst performers making a pretty good low in place, we want to start looking for stocks like this. So I would tell you that I think you could consider this on any kind of little minor pullback to the 18-day. We've got good ADX on the weekly, and we've got rising ADX on the monthly. And again, this is holding up above a pretty big breakout area. So I think this is something that could be played for sure. I just like to see a little bit better entry. And a lot of times when we get a little breakout like this, I want to see it hold, make a higher low, and then come back through the breakout area. And I think you get a little bit more confirmation that way. Okay, so Apple. Apple is getting, so it came down and held the 40-week. It held the pretty key level around 150. It's still well above the 18-month line. It's not showing any real signs of distribution. The last peak in the move to the upside had a really nice ADX peak on the weekly chart. So I don't see anything all that really disturbing with what's going on here. And now we're breaking the downtrend line. I would tell you that the question that came in was looking for a pullback to the 18-day. Can that be played off the hourly? I would say yes. We've got the one breaking the downtrend line. Now, if we can pull back towards the 18-day, you should have some kind of an opposing trend trigger using the hourly chart as the potential signal to get you in on this trade. As long as that takes place with the 18-week rising, then I think that's a good way to play this, and that way it keeps your risk down. This is pretty extended, so I don't know that we should be expecting a monster move from this. I would look at it more like a trading play. Tesla, I think, needs a little bit more work. We've made a nice move to the upside, but the 18-week is still declining, and what we should do in this is have a little bit of an up move. We're coming into this resistance zone, have a little bit more of an up move, and then make a little higher low while this is cupping around. And then we'd have, you know, this 18 rising. Now we're coming into support because we found the zero line here on the weekly chart. I just think there's a little bit too much resistance to expect this to go tearing through all that. And again, this is very extended, like the Apple chart. It's made a big run, I should say. And so you just have to be a little bit more careful. I don't know that I would be looking to play this for a long-term trade, but if this set up the right way on any kind of a minor pullback on the daily, I think I'd consider that. Okay, so LUNA to the dollar. So notice how this is running into problems right up against the 100 area. Big round number, right? And then if we look at this on a daily chart, we're moving up. But I think if we break the 18-day, then we sort of have to assume that we're going to spend a little bit of time consolidating in here and maybe filling in this area between where price is and the 18-week. And I think that would be the healthy way for this to play out, rather than trying to break out from extended above the 18, because we are right now. We're 20 points above. If we break out, we're going to be pretty far from the 18 if we go from here. So I would prefer to see this fill out a little bit. If it does take out the 100 area and you want to trade it, then you have to trade it, okay? Look at it as a trading play. So ETH, so this is playing out a lot more like Bitcoin, came down, had a failed new high, and then came down really harshly. I'm looking for a little bit more of a stabilization to take place. We're below a declining 18-week, and I think you're going to hit your head on that and maybe struggle a little bit. We had overrun on the weekly chart, so on the MACD, so I think this takes a little bit more time to get going. Now, it does raise an alert. If it can get back up through 3,200, then we can start taking this a little bit more seriously again. Okay, well, that's the end of today's show. Thanks for joining me. Please feel free to reach out. My contact information is listed. And send those stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.